Hey, what's going on, investors? Back again here with another full portfolio review here. So you guys can see I've topped the $40,000 mark, and it was actually on May 26th that I hit $30,000 for the first time, and then it only took me 70 days to reach 40,000. So the portfolio is growing really quickly, it seems like, especially even just this past couple of weeks. It seems like you can just buy any stock and it'll just go up by like 5% in that week. You have a penny stock like Kodak getting a small loan for $750 million, and that somehow adds $4.5 billion to their market cap within a few hours. How does that make any sense? But market is definitely really crazy. Maybe is reaching near that overvalued levels here, but I'm just going to keep investing, guys. And now that we reached this 40,000 milestone, guys, it's time to do another Q&A video. So be sure to let me know if you have any questions in the comments below, and I will try to get back to you in my next video. And just wanted to thank everyone for all the support. Channel has been growing pretty fast here lately, so just want to keep putting out good content for you guys, and let me know what you guys are liking. But we'll try not to ramble here too much. I even got a little timer to make sure I don't ramble on any particular stock too much. So let's get straight into it. Don't forget to hit that like button and subscribe to the channel, because these videos do take me a lot of time to put together. So best way you can show that support is doing those two things. So let's get started here. First stock, of course, is Apple. And Apple has just been on an absolute tear, really, ever since I've been owning it, and a long time before that as well. So even in the last month, it's up 18%. It absolutely killed its last earnings report. And it also announced a 4-for-1 stock split. So I think a lot of people are buying it now just because they know they'll get more shares of Apple at the end of this month. But in reality, their actual equity and value of the actual company, that doesn't actually really change, right? You're just splitting the amount of shares. So still a great company, guys. Apple, I have a $1,700 return on now, which is pretty crazy. I can buy a couple iPhones with that kind of money here, but going to be holding it forever here. Microsoft at $212. They're in talks to buy that Chinese company TikTok, so we'll see how that goes. Personally, I don't really like social media that much, but I know that people love to use it, so could be great buying potential and opportunity for Microsoft there to possibly diversify some of their revenue. Not that Microsoft needs more streams of revenue anyway. So Microsoft up almost $900 here, 62% return, makes up almost 6% of my portfolio. So it's just crazy here, guys. We have stocks like Apple, Microsoft. People always try to doubt these companies, but it's just like professional athletes, right? Like you have LeBron James, you have Tom Brady. Defenses can spend the whole week trying to prepare, try to stop these guys. But in the end, the great ones always find a way to pull through. That's what stocks like Apple, Microsoft, they are the great ones. They always find a way to be profitable, always find a way to return shareholder money. Now, another company that could be profitable for the long term here is Tesla. They just had their first full year of profitability, and they are going to be added to the S&P 500 here hopefully very soon. They've also been on a tear here, up 518% in the last year. This stock is very popular here on Robinhood. It's in the 100 most popular there. I own a very small position. We'll just probably continue to dollar cost average into partial shares into this position. Right now, only own a little under $200, but already have a pretty good return of 30%. So Tesla, just going to be a long-term buy for me as I continue to build up that position. Then we got Mastercard and Visa over there, 328. And I really wanted to highlight Mastercard here because let's look at the last time that I bought this company. I bought it, well, not the $250 dip that I bought it on, but this, I remember this particular moment on February 24th. I bought Mastercard at $324, and I remember that day so specifically because that day it was prior to C-19 really getting really bad. But I remember it so specifically because it was just a minute after I had bought that stock that day, I got an alert on my phone that said Mastercard was cutting its guidance. and the stock just plummeted like another 5% from the just the moment that I had already clicked buy. So I still remember that moment. And what's crazy is that it took all this time for the stock to finally recover from it, and it's now reached that stock price again. So Mastercard, I've held on to it because it's such a great company, and I had no doubt that it was going to return to the share price that I originally bought it, and it's going to do even better here as we move forward and as people spend more money. So I can say the same great things about Visa. Recently added to this position just last week. Visa I still think is at a great price here at just under $200. And then Amazon, of course, great online commerce, really is popping in business even at this time. I own about $550 of market value for Amazon. Still makes up just 1% of my portfolio, but this is a stock in a position I would like to continue to add to. Amazon also does a lot of business with their Amazon Web Services, and Amazon, I have no doubt, will just continue to grow and grow here. Market cap not even yet at a $2 billion. I don't think anyone's questioning whether it will reach $2 billion. It's just more of a questioning when they will reach $2 billion. So for those reasons, I'm going to continue to hold and buy more and more of Amazon. So going really heavy here into the semiconductors, we got Nvidia here. Now I own 5 shares, just bought another share yesterday. So now at 448. Intel, this is another stock that has been really getting crushed here, but let's go over Nvidia here. So 5 shares now. This is now the 3rd largest position in my portfolio. Finally got it to crack $2,000 in equity. Makes up almost 6% of my portfolio. And the returns on this have been pretty insane here. $713 total return. Nvidia is a huge player in gaming. It's going to be a huge player in artificial intelligence, autonomous cars, and they also do data centers as well. The technology that Nvidia puts out, I think I really see the vision behind it. And that's why I've been trying to buy as many shares of Nvidia as I can, because I really have no doubt that this will be a lot larger company in the future. And it pays a really small fractional dividend here basically at this point, which is pretty nice, better than nothing. And then Intel, this stock just absolutely plummeted because of its delayed use of its 7 nanometer chips. But again, when we look at the long term of owning a stock for even decades potentially, are we going to really remember the time that they delayed one of their chips for a couple of months? I don't think so. So that's why I think Intel was a buy here. I've been buying a couple shares of it on this most recent dip. And if you guys want more reasons on why I'm buying Intel, be sure to check out my latest video. I go over way more specifics. But a lot of people on the community also agreed with me that I thought the sell-off was a little too steep, and Intel is a very good company, and people always seem to be hyping up AMD. Then we have Applied Materials, a chip maker of the materials used for chips, at least. So another good company. Can't see it going anywhere here. Makes up a little under 3% of my portfolio. Also got pretty good returns on this one as well. And you can see in the past 3 months, they've done very well, as 20% almost. Equinix, a data center REIT here. One of my best positions in my portfolio. I think I'm going to add another share here. Again, maybe in the next month. So that would get me to over $2,000 in equity in them. Average cost of $505. You can see here, this has been a great company just for even just capital appreciation, but it's also been now paying me dividends very consistently as well. And the more and more shares I own, the more and more that is going to help on both sides. So going to be adding to Equinix here soon. UNH, another company that I bought recently, $317, 5 shares, and been getting a nice return here now of almost 25%. I made a video not too long ago about why I think UNH is arguably one of the best stocks in the entire stock market, and not surprised about this great returns. And of course, getting those dividends every quarter also helps. You got General Mills, which has done really good here for a more of a boring company, right? I honestly, this is totally true. Every time I go to Walmart and I'm going to be buying my cereal, I always glance over the General Mills ones. But in my heart, I'm like, okay, somebody is going to be buying General Mills cereal. As I reach and grab the Cocoa Pebbles or Special K. I do want to support the companies that I invest in, but you gotta admit, the Cocoa Pebbles and Special K, they taste pretty good. General Mills, it's got some good ones as well, but really with this $61 return, that's like enough to buy maybe like a 1-year supply of cereal for the year. So, I mean, it all adds up here, guys. Then we got the bank stocks here in JP Morgan and Bank of America at 2608. Both of these have not recovered very well since the C19. They've been really just trading sideways, so it could still potentially have a big buying opportunity here. But I do see a bit more risk here investing in the banks, but in the long run, it shouldn't really matter too much. And right now, they have a very good starting dividend yield, 3.7 for JP Morgan, and then Bank of America at 2.83, so just under 3%. Bank of America I am up on, but JP Morgan, I made the mistake of buying that at like all-time highs, so I probably won't make that mistake again in the future. Then we have the ETFs and SPHD and QILD at 51.68 shares. I think some of you thought I was joking when I said I was trying to get my QILD position up to 100 shares. A lot of people seem to be now buying the JP Morgan covered calls ETF. It's called like JEPI or something. I got a lot of people saying, oh, why don't you just buy JEPI in the last video I made about QILD. And really, I don't think there's anything wrong with owning both stocks or both ETFs here at this point, right? So QILD has been paying consistent dividends for the past 7 years, very high dividends. Don't believe what you see on Robinhood here. This ETF has really existed since 2013. And I'm already up in capital appreciation as well. But also the big thing that we want to look at here is the amount of dividends that I've been getting. So back when I owned 51.16 shares, I got paid a little under $11. So as I continue to add to this, it's going to be nice to get that monthly dividend from them. Okay, moving on here. Then we have the pharmaceutical companies and AbbVie, Pfizer, Johnson & Johnson, and then the medical equipment company Medtronic. So AbbVie was actually flirting with the $100 mark just earlier this month here. So AbbVie, $7.17 dividend is pending for me. I'm glad to finally be back up on this position. I also bought this stock at some all-time highs not too long ago, so glad to have owned it for all this time, and to see them going back up in share price is really big. Hopefully AbbVie does have a diversified portfolio of drugs to be able to sell. So AbbVie, the big risk with them, obviously, of course, is that they're going to lose patent protection on their main top-selling drug of all time, Humira, here in a couple of years. So that's what analysts are very afraid of here. But in the meantime, this has just remained a dividend cash cow. At one point, I remember you could have gotten this stock for nearly a 7% yield, which is, if you think about a dividend aristocrat like this, that's a very good bargain. Pfizer, $38.45. I know this stock went up a little bit because there's talks about them potentially having a C19 vaccine. Then we got Johnson & Johnson, an old reliable stock here at 148.30, up on this position. Then we have Medtronic at 8 shares, $800 market value, makes up less than 2% of my portfolio, and still down on this position, but this is one that I still think is a little undervalued here. Okay, then we got the financial company Prudential Financial, which is financial products and services, life insurance, mutual funds. So it's one of those companies that you probably have with maybe your employer, and you do the 401k match with, and they make you use one of their services. So that's kind of what Prudential is, and hopefully they should be announcing a dividend here anytime soon. Right now they have an insane dividend yield. I got it close to, when I first started buying my first tranche, it was close to an 8% yield. And it went down like 50% in just like a week here. It went from almost $100 to a share to like $30. So that was pretty crazy. That was a great buying opportunity. Wish I had bought more. And hopefully they announce their dividend here soon. Pretty big. It's like $1.10 a share last time. So as long as we keep getting those dividends, I can already see this investment paying itself off in a relatively quick amount of time here. Then as we keep going down here, we got the more reliable dividend aristocrats in Pepsi and McDonald's. So not much to see here, just more stable and defensive stocks here. Pepsi still have a return with them, and then McDonald's has been going up and up lately, in the last month. So it's kind of crazy to even think about, like, maybe some of our logic that we were using back when the C19 first started. Like, were we afraid that people will never go to McDonald's again? If we can see this steep decline. So they were in about the 220 range before C19, and then after C19 they fell to like $1 or $130. So it's kind of interesting to think about our logic maybe back then. Were we afraid that people would stop eating McDonald's even though their drive-thru has basically been open this entire time? I think that just shows you that in times of fear, people's rationale just completely stops working. But I'm glad I held on to McDonald's during that entire run. Was able to even get my average cost down significantly. So I'm glad I made those choices here. And Starbucks still, this one has been trading sideways for quite some time here. It just does not seem to want to crack into the $80 range. So I'm up a little bit on this position. And honestly, as long as they keep paying me dividends, I'm going to be happy with that. And honestly, most Starbucks that I've seen, at least around me, seem to be reopened in some capacity. So I think that's a good fit for Starbucks. Plus, they should be getting more market share in China now that Luckin Coffee was exposed as more of a fraudulent company. So hopefully that continues to work out well for them. Then when we got one share of Costco I own for $341, got a good buying price on this, a little under $300. Already made almost $43 on them just owning them. Costco only pays a 70-cent per share dividend. I was pretty disappointed in that. I could have sworn it was higher, but I don't know. Is that just me? Let me know below if you guys also thought that Costco paid more in dividends. But at least it does aggressively raise its dividend, and it also does pay out special dividends. So be sure to hit that like button, and maybe Costco will pay us more special dividends. All right, then we got more reliable stocks in Coca-Cola and Nrz. Kidding a little bit about the second one there. So Coca-Cola, 12 shares, $573 in market value. Got almost 10% return on them. This is just another more reliable defensive stock that I keep in my portfolio. Obviously, I don't think that Coca-Cola is going to make some sort of revolutionary new product here in the next year. I just think that people will always be buying Coca-Cola. Obviously, they've been hit hard here as people aren't able to go to bars as much. They're not able to go to sporting events, and those are places that Coca-Cola makes a lot of its sales at. Then we have NRZ, so glad to see them back to paying a dividend, and they're almost returning to their pre-C19 days here. So their most recent dividend was paid on August the 1st, and that was of 10 cents. So last time they had paid 5 cents per share. So it's glad to see them raising that dividend back up again. I think that's only a sign of good things. And obviously, during their peak dividend paying out days, they were paying 50 cents a share for a stock that cost about $12. So you just imagine the ridiculous dividend yield that was. But during this whole time, I've just been holding on to it. And then we got my real estate stocks here in Store. We got O Realty Income. We got Medical Properties Trust. And all of these have been doing pretty well. I'd say O and MPW have been doing better than Store, which has been a bit more concentrated on single tenant occupied real estate, which has been hit a bit harder here as states are not allowing those businesses to maybe operate at full capacity or not even letting them operate in general. So that's, that obviously makes it hard to make any money when you're not even allowed to make money, basically. So, it's actually crazy here. I'm actually now back up to my average cost. So that actually means I'm back to being positive on this position that I was down on for so long. And I got some great buying prices here. So if we go to my orders, you can see that I bought some here at $20, $14, and then another one at $19. So you guys can see that Store has been hit hard, and it looks like it's going to continue to go back up here. And then just another reliable monthly dividend company. Medical Properties Trust, another company that really benefited from all the stimulus bills that have been passed, and should be another one coming here soon. So hopefully that I think that only means more good news for healthcare providers to be able to pay their bills, and obviously for patients to be able to pay their bills. But Medical Properties Trust owns the real estate that a lot of medical facilities do their business on. Then we got the stock that I'm just kind of bag holding at this point, DHT. I have 25 shares for a market value of just under $145. So a very small, fractional, minute position in my portfolio. Down on this one, I had bought this in hopes of doing a swing trade, but it seemed like right when I bought it was the 52-week high, and then of course it collapsed the very next day, and then since then not recovered. But if it continues to pay out this ridiculous dividend that it gave me last time of 35 cents per share, I certainly would not mind owning it for the long run. That's like close to a 20% yield, which is pretty ludicrous, but they do have long-term contracts that they sign, so hopefully they still do have reliable money coming in, and maybe they'll be able to pay out big dividends here. Waste Management, very safe company, $112. And I'm back up on this position as well. I was able to get my average cost down during the last couple months here. Procter and Gamble, another reliable company. Wish I owned more shares of them. It seems like every time I'm thinking about buying more shares, I feel like the stock is overvalued, but then just continues to go up here. Much like most of the other stocks in the portfolio, they just seem to keep going up regardless of what's happening. So up 71% on this one, and got another pending dividend from them. Boeing, very disappointing company. Back at 170. I'm down pretty big on this position. I'll share that with you guys here. Down $377. So I think Boeing probably by far I think is my biggest loser here. Then we got Verizon at 58.55. Not much happening there. And then we have AT&T, which is, of course, is a sin stock, guys. I don't know if you guys knew that AT&T is a sin stock. They are actually one of the owners of the media company CNN. Well, okay, that sounded a lot worse than I really intended it for it to be. Really, I was just saying that I hate all media. So AT&T, in my eyes, there is a sin stock. But as long as they keep paying high dividends, I may be willing to look the other way when they keep putting out their content. So ExxonMobil and Shell, both stocks that I'm down pretty big on here. I actually even bought more. Even when they went down the first time, I was thinking that they would go back up maybe a bit quicker than they unfortunately never did. So down 34% on ExxonMobil, and then down 46% on Shell. And Shell already cut their dividend, which has been been hitting me pretty hard there because I was expecting a pretty big dividend yield from them. Then we have Duke here. Looks like it's soaring a little bit ahead of its earnings, which is on Monday here on August the 10th. So Duke, another company that I think is still very undervalued. Still think it's kind of ridiculous that this stock even sold off as much as it did. People are just afraid that we weren't going to be paying our utility bills anymore. Pretty crazy. Duke, probably one of the better utility companies, along with Southern, $54 right now. Got a small total return from them, but over time I've just been collecting these dividends from them, which has been the best part about owning some of these companies for the long run, and just watching it grow here from 60 cents when I first got it in June of 2018 to now $5.12. And at that time I only owned 8 shares, so the next time I get the dividend, it's going to be even bigger than that. All right, let's keep moving on here. So Disney, $130 here. Still down on this position a little bit, but glad to see them going back up, and hopefully they can reopen their theme parks and do it safely. And of course, the NBA bubble is being played at Disney World in Orlando, Florida. And of course, ESPN, which they partially own, can now actually talk about sports that are actually happening. I'm not sure what kind of content they were airing for like the last 3 months, but now they can actually talk about live sports again. Then we got railroad company CSX and Union Pacific. Been thinking about buying more shares of UNP. Feel like these companies are basically a monopoly. It's going to be pretty hard for any competitor to just come in there and start building as much railroad track in this United States as UNP already has. All right, then we got Chubb at 129. Down a little bit on this position, but just going to continue to hold it here. International company here, so dividends do seem to get taxed a little bit more. Then we have the old reliables and 3M, a dividend king here, 158.33. Honestly, was thinking about buying more of this on Friday, but makes up over $1,000 in equity for me, and still down on this position. But this is one I think if I can continue to get my average cost lower, I do think I can get back up in the green on this position, because I do think 3M is really at an attractive price here. You get almost a 4% yield. And then, of course, we're going to finish everything off with one of my favorite companies, Honeywell, at 155, 12% return already here, and almost at that $1,000 equity mark. This is a great alternative to 3M, another diversified industrial company. So that's going to really do it, guys, for my portfolio. So I'd love to hear what you guys have to say in the comments. Be sure to leave questions, and I will answer you guys in my next video. And keep investing and keep growing that portfolio.